Hey everyone, welcome back to the Finance Fix with Dimuj. Let's make credit sales and accounts receivable easy, clear, and even a little fun. And also, we will be diving into the world of credit sales, how to track them, manage them, and most importantly, how to get paid. Let's face it, unpaid invoices don't pay rent, salaries, or even your Netflix. What is a credit sale? A credit sale is simple. You deliver the goods or service now and your customer promises to pay later. It's kind of like lending someone a pencil and hoping they return it with interest. Think of the sales journal as your official memory. Every credit sale goes in here with all the details. So you never have to rely on your memory or sticky notes again. The humor line is because I swear they said they would pay doesn't hold up at audit time. So why recording matters? If you don't record your credit sales, you're just hoping people pay you out of the goodness of their hearts. They won't. Each customer gets their own little financial diary. You write down every sale and every payment. It's not gossip, it's accounting. Let's take Bowen College as an example. They have made 3 credit sales. September 1, sale $2,310, September 14, sale $660, and September 30th, $220 credit sales. And only 2 receipts, September 16th and September 20th. Cash received $2,310 and $660 each. And they still owe $220. Now that's something you definitely want to keep track of. Note that the balance owing increases with every invoice issued and decreases when cash is received. How do you manage your receivables? Managing receivables means reminding people nicely. Start with an email, follow up with a call, and if that doesn't work, unleash the spreadsheet. Be the reminder fairy, not the dead ninja, unless it's the end of the month. So here we are having a look at an accounts receivable schedule. The receivable schedule is your big picture view. It tells you who still owes you, how much, and for how long. Super useful when planning cash flow or buying your next office coffee machine. So let's wrap up before we go into the questions. The key takeaways are: record your credit sales, track each customer, remind kindly, summarize with the schedule. It's not rocket science, it's smart business. Let's have a look at some example questions now. This question requires you to enter the transactions in Melbourne Computer Repairs Credit Sales Journal, post the information from Sales Journal to individual accounts receivable records, and prepare the accounts receivable schedule as at 30th September 2028. Let's have a look. So, if you read the question and go through the transactions, each transactions, this is how you would record a credit sales journal entries. So September 1, repairs to Carlton College, invoice number $800 excluding GST, $80 charge as GST, accounts receivable $880. So likewise, they've done repairs to Fitzroy University and other customers. Question B is asking to record these transactions into individual records. Accounts receivable record for Carleton College will look like that, and Fitzroy University will look like that, and PS just one repair, and Classic Couriers have just one repair. So this is how the individual accounts receivable records are kept in the business. And question C is asking you to summarize the accounts receivable schedule. So this is how it looks like. Carleton College owes $3,399. Fitzroy University owes $2,123. So all together, the business has accounts receivable $6,160 to be received. This question also requires you to prepare the credit sales journal using a spreadsheet, enter credit sales to account receivable and cash received in individual records in chronological order, meaning by the date order, then prepare accounts receivable schedule, and then explain why the document numbers in the sales journal run in sequence. So the difference between this question and the previous question is that this question has the cash received that you have to account for. Let's have a look at the answer. As I keep saying, pause the video and review the question. Try answer it by your own and then compare it with my answer. So A, this is how a credit sales journal look like to different customers, different dates, different amounts sales. The dates are in chronological order. And question B shows individual records by the customer. Looks like that. And in question C is showing an accounts receivable schedule just as a summary. So the question D is asking explain why the document numbers in the sales journal run in sequence. Because it maintain a clear audit trail, prevent duplicate or missing invoices, ensure accurate record keeping and make it easier to trace and verify transactions, comply with accounting standards and internal control procedures. There's another question, pretty similar. This question is also asking from the list provided into the relevant transactions in a credit sales journal and a credit purchases journal. Prepare individual records, both accounts receivables and payables, to Strathmore sign writing and draw up both accounts receivable and accounts payable schedule as at 30th November 2028. Let's review the answer. So go through the questions, so compare your answers with my answers, and this is how a credit sales journal will look like and the credit purchase journal look like, and then individual records are shown here as well, both accounts receivable and accounts payable records. And question C, AR summary and AP summary here as well. Here's another question for AR and AP. The question is asking you to enter the relevant transactions into a credit purchase journal, prepare individual records for accounts payable, showing in all entries in correct sequence, prepare the credit sales journal, prepare individual records for AP, prepare AR and AP schedule using credit journals, determine the GST situation of this business as at the July 2028. So the only difference is that it's asking to record GST situation. So let's have a look at, so A, credit purchase journal look like that. B, individual records for payables will look like that. Question C, credit sales journal is that, and individual accounts receivable records look like that. And then question E, accounts receivable summary and accounts payable summary. And then the GST situation. As you would know, the GST collected from when you have to buy something from outsiders, when you purchase something, you have to pay GST. That means you have paid GST already. That GST is called input tax. But the GST that you are charging to customer is called GST collected from customer, is called output GST here. So when you do the credit sales, or cash sales, you charge customer GST. So I have summarized what we have collected what we have charged our customers, and I have summarized GST paid on purchases, called input tax. So the GST payable or refund is calculated by GST collected minus GST paid. So in this situation, this company has collected $177 worth of GST from customers and have paid $150 of GST for purchases, and GST payable is $27. Therefore, at the end of July 2028, Perfect Fit Tailors has a GST liability of $27 that needs to pay to the tax authority, which is the ATO. This amount represents the excess of GST collected from customers over the GST paid to suppliers during the month of July. This question is also pretty similar. Please go through the question, and answers are all there for you to review and compare your answers. Try it in your own and compare all your answers, and go through all the exam questions here as well. And I have some ethical consideration. That's a very comprehensive answer is there. And also I have exam style questions here as well, and I have given you some answers there. Please review and get familiarize yourself, and yeah, just learn credit sales and accounts receivables and GST and GST payable situation as well. I hope you learned something today from this. Thanks for watching. Hit that like button if you've ever had to chase a payment. So all of us, subscribe for more small business finance fixes. And remember, getting paid on time is the best love language. Thank you. See you in the next one. Bye.